Is it better to buy stock in a standalone insurance company or in one of these like mega financial institutions that do a little bit of everything, like AIG, for example?
That's $1 million question. If you're going to put me on the spot, I personally would prefer to just invest in a pure insurance company because if you're taking the insurance risk, I just want the insurance risk, right?
Right.
Um, I don't, if you look at the really big insurance companies out there, most of them, especially AIG, hasn't done particularly well recently. It's just because I think personally it's very hard to run a company where you're taking so many different risks and truly understand it.
Yeah, I think that. So I don't know if y'all know about this, but Carl Icahn. Am I pronouncing his last name right? I think I've only ever read his name. I don't think I've ever heard his name.
I think you're getting it right.
Yeah. He is kind of like this activist investor type person, except he's just one person instead of like a group of people. And he's taken an interest in AIG, and he really wants AIG to split up its divisions. And partially, that's a good idea because that way it'll dip underneath the systemically important financial institution line. But he says also that it makes business sense for them. Like they'll make way more money as a separate set of businesses as opposed to this like conglomeration that they have now.
And I wonder if, to some extent, I kind of wonder if he might just be a little upset at management personally, because they
He
finally
does.
have a CEO who really doesn't have any industry background, and I think it really concerns a lot of investors for good reason. If you want a good insurance company executive, you really want someone who's familiar with underwriting and familiar with risks, so that when they see, here's what we're actually risking this year, they actually truthfully understand the number.
Yeah, that's another thing that, of course, just like any other company, right? Insurers also have management that you have to kind of look into. It's really interesting because I feel like with a lot of the technology companies or consumer goods companies, they have these like super dynamic CEOs, and you know a lot about them. But like with insurance companies and banks and BDCs, there's not really ever a ton of information on managers. It's just kind of like, oh, they went to Harvard and graduated in '89, and they
Right.
worked
They
at
studied engineering, they went to Harvard, and then they became a financial industry executive. I
yeah.
just wrote 95% of insurance or financial people's background.
Yeah, yeah, and it's like kind of like I don't know whether or not I should trust this guy, and in order to do that, you just look at their track record. The other thing I really like to do is read conference call transcripts because I think that you can get a sense of whether or not people are being honest and forthright
hmm
via what they say. I know that's like kind of like a nebulous thing to quantify, right? It's just a gut feeling, like whether or not you trust these people. But
Right.
besides track record, that's all you can really do.
Right. Progressive usually has a really clear conference call, and they're very plain and open about what they're looking for. They'll straight up say, "We're shooting for this, underwriting margin, and we think we can grow by doing this." For example, that's something they've done recently is targeted a lower or a higher combined ratio, rather. Getting back to how that's confusing, a higher combined ratio, but also growing the top line. So, and over time, you'll see, especially with property and casualty, car insurance, things like that, you can figure out really quickly if they're a good company at underwriting or not because those policies, expire within a year. So either you nailed it or you didn't.